Washington rhetoric is usually similar to geopolitics. It's something that U.S. investors can look through.
All right, Marta, let's start with tariffs and Greenland. President Trump's latest threats toward Europe have markets on edge. We've seen volatility surging. Bottom line, Marta, what do these threats actually mean for markets right now?
Well, U.S. investors can typically look through geopolitics since they don't necessarily always have an impact on corporate outcomes. Tariffs, of course, can affect earnings, and the recent announcements call into question some of the trade deals that have been recently established. We don't know how things are going to play out, but two broad thoughts. First is that while we know tariffs are part of Trump administration policy, these seem clearly oriented toward negotiation, which may make them shorter term. And two, we know that Trump is market sensitive. So the volatility that's occurring today is likely something he's watching.
So, Marta, we're talking about volatility, not a hit to the underlying economy just yet.
Just yet. That's right.
All right. So President Trump is also leaning really hard into affordability, talking about everything from caps on credit card rates to going after big landlords to pushing on housing and healthcare costs. How should investors think about that agenda?
Well, Washington rhetoric is usually similar to geopolitics. It's something that U.S. investors can look through. In some of the instances, though, that you're describing, Vanessa, these might impact corporate earnings, especially if they're established and remain in place for the long term. So it's not as though we are suggesting investors develop a trading plan around Washington rhetoric, but we do think these proposals are things investors should keep an eye on.
So we're going to have to keep a real close eye on Washington this year as well.
Yeah, it seems like it so far, at least.
Okay, Marta. So with all of that in the background, where do you see the best opportunities right now?
Okay, so we've kept an eye on non-tech areas for a while. Healthcare in particular and small caps seem to have more reasonable valuations, and that remains the case today. But there are also some opportunities emerging around technology, including members of the Mag 7.
All right, Marta, we're going to leave it there for now, but we'll be back with full coverage around the Fed's decision next week and what it could mean for rates. We'll see you then.